Okay. Everybody has a different language to describe the market, and price action. Oh, this new term that came along. People like to use that, price action. And the Fibonacci, that's really cool too. That's a cool word. But this guy's running RSI in here. And I always want to show you a couple tricks in RSI that I don't know if he's aware of this stuff. He probably would think that anybody that criticizes or anybody that tries to help somebody is a troll, but that's adorable. I think trolls are adorable. But if you look at the pullback in RSI here, it's more oversold, but price is actually higher. And that's called a positive reversal. You see the same thing here, more oversold, price is higher. Plus you have a top becoming a bottom. Now he's going to try to get long this thing, and because he's struggling for an entry technique, which I think he's better off, or I'm better off. Somebody said that, oh, not everybody trades the same way. Right, but the way you trade determines whether you're making money or not. So don't you want the best entry? And this guy is a single position trader, although he did take some money off the table on one of his trades. But if you just ran a trailing buy stop on here, and of course the smaller the candles get, the more the less risk you have. And you could get filled on some of the position here as this comes back. This is actually going to come back to here in the end. And or it's going to come back to about right here. But there's going to be a big spike here. So let me go back to his description of this. And there's also a divergence. Well, not really. He's got a 7-period RSI here, I think.
Would expect a move back to it or a move right near it. Maybe these structure highs right here, 120.18s. Boom. You can see structure right here between 120.18s and maybe that 120 even handle.
120 even. He just nailed it. See, now this is, and I don't know if it's because this guy's afraid or he's got a Fibonacci tool so he's dying to use it. But that's actually the market turn. Right on a dime. I've got the example here of what happened during that pullback. And I've got the 100 pip handle marked. And notice the double top on closing prices at the 100. This is very familiar to anybody that looks at the line chart. You've got the double top at a triple top at the round handle. You pull it back just below, again at the round, and then you cut through. And it really doesn't look back. There's a pivot here around 50-ish without any Fibonacci. This double top at the 100 comes back. Now, the entry technique, which is critical, there's technique, there's style, there's, fill in the blank, but technique is kind of a mechanical trading system. Now, if you had trailing sell stops here, you would have got caught here, you would have got caught here, but here you would have made it all back, and you would have filled this giant void here without regard to Fibonacci or all that nonsense. He's trying to get long here. Now, he gets long. Notice the double bottom becomes a top on closing prices. This is a 1-period moving average. And it happens at the 100 pip handle. So he could have had an order here if he's a single shot guy. If he's a person that's mechanically trading it, he's got trailing buy stops here that never makes a higher high. And when it does, it picks you up in the flow, and you're long for this, for the retest, you cash out. Plus, you get long because you have to imagine that the bulls have their stops here. So once they capture that stop, and that's why there's so much volatility in these wicks, it's because there's a real house cleaning there. Just like here, big candle because it's grabbing, it's grabbing those orders. Same thing here, fake out, breakout, grab, pull back. Now, in the structure world, which is closing prices, is not the wicks. Top becomes a bottom here. Now he's going to put a bunch of fibs on there. And this is, to me, a desperate move. a desperate thought, and a waste of time. An utter waste of time. Fibonacci is just complete garbage. Prove me wrong.
So as a trend continuation trader, I'm asking myself, how can I get involved in that area? And, well, we're going to have to wait and see what price action does. It should be a good opportunity. Now, the question is, where is this market going to retrace at in this zone? That's the hard part. We can start by doing a Fibonacci inversion of our last move, so our swing high to swing low backwards. Seeing what we get in there, you can see I get a 127 right at 120.13. I get a 1618 inversion right at 119.84. I can also take my Fibonacci retracement tool from.
But why would you? Why would you do all this stuff? This is like, I guess, in terms of attorney trading metaphor, you're trying to create a case. You're trying to build a case. You're going to try to create all this stuff, but you know, when do you get in this handle or to get a handle? Now, if he was scaling in, I can understand, but I don't think he's a scaling trader. In fact, I don't see even. Apparently, he's just trading one position, so I don't get it.
Our swing low right here to our swing high. I don't know why it's giving me all these retracements, but
see now. He's already giving all these retracements, right? It's too much, right? But he's trying to fit fib into the market. Fibonacci is just the most distracting and irrelevant aspect of trading. I would think it's more, he could actually be on another currency pair right now placing a pending order.
Put in the ones I need. 382. I don't need that. I don't need that. There we go. 786. You can see I get some confluence. I get 886 lining up right with that 1618.
Well, of course you do. You just inverted the thing, and you're just creating all this argument to. And another thing, psychologically, what's going on here, what's wrong with this, is that getting all your ducks in a row and the anticipation and the expectations go up, and you're just setting yourself up for psychological damage.
Get a 618, essentially lining up with that 127. Let's just take one more fib from. Let's take two more. One from this.
Yeah, let's fib the living F out of it, right? Let's fib this thing till. And in the meantime, you know, not everybody trades the same way. Some people are just putting buy stops along this. They're like, it's going up, so you know, it's in an uptrend, I guess, to some degree. Last price pulse was up, so last known move is up. Maybe there's follow through, so start like just building a position, get a little bit in. Sure, maybe get in at every fib handle, right? But that's not what he does. He just gets in at one.
Swing low to this swing high, right in there. See if we get any confluence. Not really. Let's take one from this swing low.
And of course, he's not using closing prices. He's putting all his fibs at the wick. I don't get the whole like taking that wick, taking a blast move and using that as a reference. Very bizarre.
Right here, swing low to swing high. See if we get anything. 50% or 50% and 382. Okay, so I would say your two levels to look to get short are going to be right here. Your first level that I would look for, and again, either way, you're still looking for confirmation, guys. I'm not saying buy it right here. Your first level is going to be right in this area.
I think he meant to get long.
This is where you have your first Fibonacci cluster. Your second Fibonacci cluster is going to be right down here. So, again.
Well,
what we're doing, guys, is we're just making predictions of where we think this reversal is going to come. But
when you say Fibonacci cluster, don't you negate the whole point of being so precise at 2168 or 4168 or 0.68? I don't get if you're going to go to decimal, it's been proven random lines for entry work just the same.
Or in these zones, you're still looking for price action to tell you what you need. So from this point right here, 120.24 to down here at 119.64, this is your potential reversal zone.
It's a whole zone now. I mean, I need something to drink here. Are you serious? Like, is this guy? Now, I could zone trade this thing, and You know, if I could manage all the, if I could be more polite, I probably could have one of these things that this guy has, is which people subscribe. People subscribe and they they're like, oh, I'm a member.
Key number one. Key number two is stops need to go below this previous structure, so below that reversal
Hell,
zone.
I'd be buying down
and
there.
Targets, you can look for a retest.
How many times
of
we've seen
previous
that
structure
happen?
highs up here at the 121 even handle. So entry area, stops, targets. Of
Entry
course, usual
area.
rules for stops, I use ATR, so that this is just an estimation.
ATRs.
I'd have to measure the ATR and see where we're at.
How much more are we going to stack on this one trade?
All right, guys, back. Just wanted to give you a little update on the dollar-yen trade we talked about in last night's syndicate video. Apologize for my voice. It's first thing Thursday morning, so I'm
all right.
still
I'll give you a break there.
waking up. Haven't had my coffee yet, but
I'm
you
having
can
mine
see.
right now.
Let me get rid of this box here. You can see the dollar-yen came right down into our potential reversal zone. Again, we measured out the top of our previous structure high
Obviously.
and our previous outside
Didn't need all the
return.
fib.
We came
Did you
right
now?
to that level of Fibonacci confluence, put in two beautiful pin bars, and you remember last night entered right about, there we go, right about 120.27, and the rest is history. This thing went straight up. We took
So
targets
he risked
off that
27
previous
pips or
structure,
something?
right at that psychological number 121.
He could have got. I mean, he could have
even.
got in at the round handle.
And this is considered a pretty pain-free trade. Not just because it went straight up, but because it happened overnight. So, of course, when you're sleeping, you don't have to worry about it. Well, maybe some of you do, but you don't. At least you don't have to watch it. So, just wanted to update.
Okay, well, let me just go to my final example here. So there's 2 hours of wicked pin bars that he said, and he got in 27 pips above the round handle. Okay, he could have done that with a trailing buy stop. You know, it's so overrated, and I'm really not. I'm not a hater about this guy. I love this guy to death. I mean, what a nice guy, and what a polite guy, and everything. And he even drinks coffee, so you know he's in my he's on my team. But gosh, really, did you really need all that fib and stuff? And look at the failure at the retest of the double top. Now, having sell limits just above here, and I know this is really counterintuitive, and that's what the markets really are. Sell stops just beyond there. I'm sorry, sell limits just beyond that top. How does that trade look? Pretty good. And where does it come back to? The doji. The structures are on closing prices. Structures are not. See that top become a bottom? See that? The structures are not on the wicks. Wicks are pointless. They are useless. They only tell you where what the wicks show you the volatility of the market. Look at this giant spike here. But after it pulled back here, you could have still got long based on structure. Real structure. Top became a bottom on the 1 hour. Sure, it went up here. You could have shorted it there and gone long after this pause. You had a small bar. Even stop entry guys could have got in. Volatility breakout guys could have got in there. So don't waste your time with Fibonacci. They're Gartleys. I know he moved away from the Gartleys. I haven't seen them because those are all losing trades because they extrapolate so far into the future. It's absolutely ridiculous. This is like trying to land on a planet. It's like building a spaceship for a planet that may not exist. Would you do that? Would you spend all that time and effort calculating trajectories? And you're like, I don't even know if that planet's there because, you know, the speed of light travels at X, and, you know, by the time we get there, maybe that planet doesn't even exist.